It is 8:44 a.m. Pacific Daylight Time. It's the 21st day of August 2026, and this is episode 1377 of Bitcoin, and with me, your host, David Bennett, bringing you all the news that you can use about Bitcoin and macro from around the world. First up is going to be the CFTC, talking about what they're going to do if there is no Clarity Act, because they're going to do something. And I'm going to tell you all about it. Today's going to be pretty much a short show. It's Friday, and honestly, other than the fact that we've got a little bit of a price pump going on, there's not all that much going on. And I'm just not going to water the show down. So I'm going to give you, like I said, like I always do, all the news that you can use and nothing more. We are going to talk about some Iranian hackers. We are also going to be talking about are we still in a winter? Are we still in Bitcoin winter, even with this price pump? In the second part of the show, we're going to talk about just how many shorts got liquidated over the last couple of days. And then AI adoption amongst criminals. We seem to have some numbers that have come out on that. And then we're going to talk about most likely AI actually being used in a criminal endeavor in the hacking of yet one more shit chain that is part of the DeFi stupid system. Yes, not ecosystem, stupid system. Let's go and talk about the CFTC. Turner Wright kicks it all off from Cointelegraph. Woohoo! CFTC chair says that the agency will move forward on crypto regulation if clarity fails. So Michael Selig, he who chairs the U.S. Commodity Futures Trading Commission, signaled that the agency not going to be idle while Congress continues to debate provisions in a cryptocurrency market structure bill. In prepared remarks for the inaugural meeting of the CFTC's Innovation Advisory Committee on Thursday, Selig said that the commission would move forward on crypto regulation even in the absence of the Clarity Act being passed by lawmakers, adding that it would help President Trump deliver if Congress will not. According to the chair, he had already directed staff to allow registered and non-registered entities to offer crypto asset trading on a leveraged or margined basis and explore developer protections. Quote, "We're going to give Clarity its breathing room for a vote, but if the Democrats cannot support a bipartisan work product, which reflects compromises from both sides of the aisle, and ultimately send a fair version of the bill to the president's desk, then rest assured I will direct CFTC staff to move swiftly to propose these new rules for the industry," said Selig. Sounds like a threat. The market structure bill is effectively paused until the U.S. Senate returns to session in September, when Majority Leader John Thune is expected to hold a cloture vote on the legislation. Clarity would need 60 votes to pass the chamber and return to the House of Representatives, whereupon it could go to Trump's desk for final approval or a veto. Selig's remarks come just a day after the CFTC chair stood alongside Trump and other crypto industry leaders at a White House meeting. The president urged Congress to pass a fair version of Clarity to keep the country, quote, ahead of China. Many Democrats in Congress have been calling for stronger ethics provisions in the bill, specifically to address the Trump family's crypto investments, which netted the president $1.4 billion in 2025. Let me pause just to say, let's clarify that a little bit. It made his family $1.4 billion. Now, yes, does he get to take part of that? Absolutely. He's part of the Trump family. But the way that sentence reads is that $1.4 billion went directly into his pocket as of today. That's not entirely true, although it is partially true, not entirely true, because it actually went to the companies He owns the companies, but to be able to get that money out of the companies for his own personal use, you got to jump through hoops. It's not, that's the thing that I don't think people understand about, if you start your own business, like let's say, and that business makes money, you can't just go spend it on a car for yourself. You have to do things like take a distribution, which means that you've got to file paperwork, right? You don't, you somehow or another, you set yourself up on the payroll of that company that somehow or another reflects a percentage of profits, particularly like in that year when you get a whole shit ton of money in versus years that you don't get a shit ton of money in. And that's not really something you can defend in court if somebody decides that they want to, I don't know, somehow or another break the corporate veil, right? There's shit you got to do. It's not like, oh, Trump made $1.4 billion on all this stuff. He did, but he can't really use it. Not yet, and not all at once. So it's not technically what people think of when sentences like, oh, he netted $1.4 billion out that deal. Yeah, not really. Kind of, but not really. I just want to be clear about that. Anyway, the CFTC chair's agenda echoed that the U.S. Securities and Exchange Commission, which on Tuesday released proposed rules for digital asset regulation. The securities regulator said that the rules could provide crypto companies with a safe harbor policy from tokens being treated as investment contracts. Selig spoke alongside Innovation Advisory Committee Chair Walt Lucken and the body's designated federal officer Michael Pasalakwa on Thursday. As the only Senate-confirmed commissioner at the CFTC and a leadership panel expected to consist of a bipartisan group of 5 members, Selig has been solely responsible for directing the agency's agenda since December. The CFTC committee also discussed issues related to, of course, artificial intelligence and prediction markets on Thursday. Under Selig, the agency claimed that it has executive jurisdiction over prediction markets due to event contracts on the platforms being considered swaps. The chair has directed the commission to file lawsuits against state-level authorities challenging this position in cases involving companies like Kalshi and Polymarket. That's the end of the article. So I just find it kind of humorous that the CFTC keeps saying, hey, prediction market guys, no, they're not bets, they're swaps. Now, I think that's funny because of this. Take yourself back to, like, I don't know, if you're old enough, to the mid 80s, like, mid 80s to mid 90s. And somehow or another, you got a bookie and you're betting on, I don't know, the New York Knicks to take it all one year, right? And somehow or another, you get found out. The Vice Squad comes down on you and says, hey, we know you've been making illegal bets. Like, let's say you're doing it in Texas. You can't have a quote unquote bookie in Texas, at least not legally. You can't make book. You can't do bets, right? Not in Texas. I mean, I think there's some pari-mutuel betting on a horse track somewhere in Texas. I'm not exactly sure. But you can't just like make a bet on the Knicks, taking it all, 1 year, right? Well, let's say you go, oh, well, no, I'm not actually making a bet. This is a swap, like in investment speak, like financial lingo, buddy. I'm not making a bet. It's a swap. It's a swap. Yes, you're fine. Go away. Yeah. See, the CFTC can say shit like that, but you can't. That's why I think it's freaking funny. But there's something else up here that I want to get back to. I've highlighted it. This is that quote from Selig, right? Basically, he said, and I'm not going to give you the whole quote, but he said, essentially, we're going to give the Clarity Act some breathing room, but if for whatever reason you assholes don't pass it, quote, I will direct CFTC staff to move swiftly to propose these new rules for the industry. Then why do we need a legislative body and an executive at all? And I'm just asking a straight question. I'm literally not making commentary here as much as I think people would think that I am making commentary. I'm trying to ask a functional question. If the Clarity Act represents the way the United States is supposed to work, with the legislature working on particular language in bills that are supposed to be voted on by, quote unquote, the people of the United States through the representative legislative bodies, and then sent to the executive to be executed or signed into law, as in being executed by the executive. If that's the way it's supposed to be, and it technically is, then what's up with Selig being able to say, I don't give a shit if you pass it or not, we're going to make rules? Well, then why do we need the legislature and a president? Why don't we just have the CFTC, the FBI, the CIA, the SEC, the Federal Reserve? Why don't they just do everything for us, and we can just lose the legislative branch and the executive branch altogether? Fuck it, man. And that's, again, trying not to make commentary as much as I'm asking a functional question. If I don't need the Clarity Act to pass in order for me to install the shit that I want the Clarity Act to do that it didn't, then why do I need a legislature? Why do I need the executive? It's something to think about. Let's move over to the Middle East. Woohoo! Hormuz, baby. Iranian hacking crew charged in sprawling theft case, including a $6 million Bitcoin ransom. And this is Matthew DeSalvo writing for Bitcoin Magazine. Feds have hit 17 Iranians with criminal charges for allegedly conducting a years-long campaign of cyber attacks, including trying to extort HBO. Yeah, HBO, the streaming service. And if you don't know, HBO used to stand for Home Box Office, for $6 million in Bitcoin, specifically in Bitcoin. The U.S. Department of Justice said on Tuesday that the 17 individuals were working with the Mobna Institute, which carried out hacking campaigns on behalf of Iran's Islamic Revolutionary Guard Corps and other Iranian government and university clients. The universities are in on it. Wow, okay. Hundreds of U.S. and international universities, dozens of companies, and at least 5 state and federal government agencies were targeted in the campaign. Part of the indictment mentioned Behzad Mesri, who was previously charged with hacking entertainment giant Home Box Office, or HBO, and stealing proprietary data. The crime then saw Mesri try and extort approximately $6 million worth of Bitcoin. Wow. Prosecutors added that 5 other defendants, and I can't pronounce any of their names, were directly involved in the hack. The State Department's Rewards for Justice program is now offering up to $10 million for information on the location of the defendants. Quote, today's charges, which include 8 additional defendants, reveal the broader network allegedly behind a sweeping state-sponsored campaign to steal research and intellectual property from American universities, businesses, and government institutions, U.S. Attorney Jamie McDonald for the Southern District of New York said in a statement. Founded at around 2013 by some people's names that I have no hope of ever being able to pronounce, the Mobna Institute allegedly worked at the behest of Iran's Islamic Revolutionary Guard Corps and other Iranian clients. The stolen research didn't just go to Tehran's intelligence services. Prosecutors say it was resold through 2 websites, megapaper.ir and gigapaper.ir, the latter renting out hijacked professor logins so Iranian customers could walk straight into foreign university libraries. Holy shit. U.S. institutions had spent some $3.4 billion acquiring the material in the first place. Separate victims racked up more than $20 million cleaning up the breaches. Jeez. Okay. Guess the Iranians are much better at this hacking business than I once thought. Okay, moving on. Crypto is still in winter price-wise, but it's an institutional summer, STS Digital CEO says. Brian Danga, writing for The Block. STS Digital CEO Maxime Sealer said digital asset prices have diverged from institutional adoption, with institutions continuing to build on crypto technology even as token prices have underperformed. Quote, "We're in crypto winter price-wise, where we're in an institutional summer," Seller told The Block's Kevin Spark. Seller said institutions are adopting the underlying technology rather than necessarily directing capital into the tokens, contributing to a gap between adoption and asset prices. Quote, "As institutions come in and adopt the technology, money doesn't flow necessarily into the tokens today. It's the technology that is being adopted," Sealer said. Bitcoin was trading above 77K early on Friday. Seller also pointed to the decline in Bitcoin futures bases as evidence of the crypto market's maturation. He said annualized futures basis that reached 20 to 30% during the 2021 cycle has since converged towards more of the risk-free rate. Quote, "Future bases have converged pretty close to the risk-free rate, and they have also become much more stable," he said. The CEO attributed the change partly to deeper channels for dollars to move into and out of crypto, saying the basis and forward rate had become considerably less volatile than in 2021 cycle. Bob Rutherford, CEO of Clear Street Digital, joined Sealer in the interview and confirmed a strategic partnership with STS Digital, under which STS will power Clear Street's digital asset offering. Rutherford said that the firm is rolling out a 24/6 trading across all asset classes. 24 hours a day, 6 days a week is what they're saying. They just don't actually spell it out. He said the shift reflects growing demand for markets that operate outside traditional weekday hours. Quote, "We live in a global economy where news cycles rotate every 5 minutes, and nobody cares if it's Sunday at 2 in the morning, Rutherford said. I got to come back to that. Meanwhile, Sealer said 24/7 trading access across all assets will create the need for margining, clearing, and collateral settlement to operate around the clock, pointing to Hyperliquid's weekend traction as pressure making traditional finance extend its hours. STS raised $30 million in a strategic funding round in February, led by CMT Digital, with participation from Payword, Strobe Ventures, Arrington Capital, F Prime, and BitRock Capital. The firm said at the time that it would use the capital to expand its market-making capabilities and institutional spot and options platforms. The firm is regulated by the Bermuda Monetary Authority. In August 2024, STS Digital acquired Swiss crypto market maker Flavtech, integrating its trading infrastructure and proprietary algorithms into STS's platforms. All right, that's the end of the article. I love this quote. "We live in a global economy where news cycles rotate every 5 minutes and nobody cares if it's Sunday at 2 in the morning. This reminds me of a movie, or actually not a movie, but a documentary I watched a long time ago about it was about a particular .com company and the people that started that company, but it was more about the .com bubble back in 1998, 99, well, more like 1999, 2000, 2001. And I can't remember the company's name, but essentially it was like basically procuring government documents, like, getting a fishing license, getting a hunting license, renewing your driver's license or ID card. like if it had something to do with state and federal government and had something to do with ID or having to get a license for something, this is what this company was all about. And their elevator pitch was it went something like this. We live in the internet age, and it should not matter if you are in your underwear at 2:00 in the morning on Sunday. You should be able to renew your Texas driver's license. Needless to say, because this particular .com was part of the .com bubble, nothing ever came to fruition except the three founders of that company walked away with something like $60 million apiece. And they were broke to begin with. There was never a product. There was never a service. Hell, I don't even think there was a functional website. And if there was, it wasn't all that functional at all. And still, like I love it. It was like at the very end of this particular, I think the documentary was literally called .com. Don't quote me on that. But at the end, like sort of at the epilogue part of the documentary, they were talking about one of the original founders of this company and how he had started retreats for, Fortune 500 individuals that were trying to navigate the future of the internet. And he was doing it on his newly purchased ranch. And I'm like, wow, you didn't have to do anything but okay, agreed. For the 2 years that they were trying to get this shit done, they had to go to a lot of meetings, they had to set up a lot of presentations, and I guess their hearts were in the right place, but they did do a lot of work. But being able to, come out the other side of 2 years of hard work and be able to buy a fucking ranch, dude, no. Even I don't buy that shit. Anyway, so going back to the original part of this story is that they're basically saying, yeah, they're buying the technology, they're just not buying the tokens when it comes to institutional adoption. Yeah, kind of, but that's sort of the way that it's been for a while. And honestly, I really haven't seen any traction from any of these companies like JP Morgan, and they started JP Morgan coin. I really haven't seen that being used. I've seen stories of it out in the wild. It's not that big of a thing, but you never know. Maybe we're coming back into a bull market. Do I believe that? Not yet. It's not that I don't believe it yet. I just say I don't think we're at. I mean, we got essentially we saw over this last week, we saw a $10,000 candle. It's one of those green candles that spikes you right through the forehead when you're poking Bitcoin with a stick. And if you haven't seen that meme, then you may not know what I'm talking about. But it's just, it's not enough given what we've gone through. It's not enough for me to go, oh yeah, bear market's over. So I'm cautiously optimistic at this point. Let's run the numbers. CNBC futures and commodities, Murban crude up 2 points to 103.15 a barrel. Brent North Sea knocking at $95 after a half-point rise. West Texas Intermediate is unchanged at $86.83 a barrel. Natural gas also moving in the green today, 1 1/3 to the upside to $2.76 a thousand cubic feet. Gasoline up 2 1/3 to $3.34 a gallon. Metals are all in the green. Platinum up 1/3, gold up 2.2% to $46.72. Wow, broke 4,500 for the first time in weeks. Platinum up 3 points. Silver is up over 2 points to $69.59. Copper up 1.69. Ag, mostly in the green today. Biggest winner, sugar, 1 1/4 to the upside. Biggest loser is coffee, 2/3 to the downside. Live cattle down 0.8%. Lean hogs up almost a point, and feeder cattle down 0.6%. S&P is up over a half. The NASDAQ is up about a half point. The Dow is up 0.8%, and the S&P Mini is up a third. And then there's Bitcoin. What's it doing? Okay, it shot just up to $80,000 a coin early this morning. It is now back down to $77,070. It's a $1.55 trillion market cap. We can get 16.8 ounces of shiny metal rocks with our one Bitcoin, of which there are 20,073,094.88 of. Average fees per block are slightly elevated. We've got 43 blocks carrying 86,000 unconfirmed transactions waiting to clear at high priority rates of 3 sats per VByte. Low priorities will get you in at 0.9. Hash rate, still good. 916 exahashes per second is what we got for the security of the Bitcoin network at this time. Look, man, if you want to support the show, the Bitcoin and Show, you can do so at bitcoinandshow.com. That's bitcoinandshow.com, because at bitcoinandshow.com, you can get a paid package to support the show. You'll get what everybody else gets, whether you pay or not. But I've got 2 different tiers. You can do it for $5 a month, or you can do the entire year for $50 a month. Or you can take it, or $50 a year, or you can take the free version. Everybody gets the same thing. Now, I haven't updated it over the last week, but generally speaking, I will try to turn 2 or 3 of weekly, of the weekly episodes into small articles, a little bit of artwork, like a link to the actual full length show, who the sponsor of the day was, if there was a sponsor of the day, and all that kind of stuff. But really, it's a way for you to support the show with fiat currency. But if you want to support the show in actual money, like real solid Bitcoin, then use Podcasting 2.0. My favorite Podcasting 2.0 app is Fountain. I love Fountain, but there's like 8 of them. And all of them are just podcasting apps. That's what you use to listen to podcasts, except you get a Lightning wallet with all of them, and you can stream Satoshis. Like you can stream 10 Satoshis per minute. Or you can just throw me a stack of sats and send a note along with it, like Terron with his palindrome boost of 1,001 sats, and says, "Cheers. Enjoyed the episode." I'm happy to hear that. Nick Dose with 261 says, "Cheers." Jason High with 250 sats says, "Thanks for the show." Nostr Gang with her customary palindrome 101 sat boost says, "Thank you, sir. May I have another?" And that always reminds me of one of my favorite movies, Animal House. If you have not sat down and watched National Lampoon's Animal House with John Belushi, I don't know what you're doing with your life. That's the weather report. Welcome to part 2, the news that you can use, where Bitcoin climbs higher as $1.2 billion in shorts get liquidated. I shit my pants. Decrypt.co, written by Guillermo Jimenez. Bitcoin extended its rally on Friday, punishing, absolutely destroying traders who had bet against it and wiping out more than $1 billion in bearish positions. The largest cryptocurrency changed hands at around 77,137, up almost 8% over the past 24 hours, according to CoinGecko. The surge steamrolled leveraged short sellers. CoinGlass data showed about $1.5 billion in total crypto liquidations over the past 24 hours across 178,777 traders, with short positions accounting for $1.2 billion of that sum. All right, so that means that everybody was heavily short and they got caught with their britches down. Bitcoin alone drove about $17.25 million in liquidations on the 1-hour heat map. And the single largest liquidation order in the last day was $23.59 million Bitcoin position that was wiped out on Hyperliquid. The dynamic is a textbook short squeeze in which rising prices force bearish traders to actually have to buy back their positions, adding even more fuel that pushes prices even higher. The rebound follows a bruising stretch for the market. Bitcoin surged toward a recent high earlier this week in a run that touched, or rather torched, $3 billion in shorts, and analysts have been divided on whether that momentum can hold. The rally has coincided with a wave of favorable headlines out of Washington. President Trump backed the Crypto Market Structure Clarity Act at a White House gathering this week and signaled regulators were working to bring onshore, or rather offshore, perpetual futures exchange Hyperliquid onshore. Remarks that helped juice sentiment across the market. Bitcoin wasn't alone in the advance. And then they talk about how shitcoins shared Bitcoin's coattails, as they always do. And that's the end of the article. But it says, I love this article. It says, the rally coincided with a wave of favorable headlines. And all they talk about is President Trump publicly stating that he backs the Clarity Act. We know that. We've known that President Trump wants the Clarity Act to pass. What, again, and I think I said this yesterday, what they're not saying is that has nothing, absolutely jack shit to do with the price escalation that we've been witnessing this week. So you might, if you missed yesterday's show, you might ask, what, pray tell, are you talking about? I'm talking about the Treasury, the United States Treasury, doubling down on how much debt that they're going to purchase. They're repurchasing their debt. They always do. But now they've increased it by over half. So what they were buying back in debt, they are effectively more than doubling. Because and the excuse there was, well, we don't want the bond yields to really screw up the fixed income market. And again, I call bullshit. It's not, I mean, that's part of it, but I don't think that's the majority of it. I think what it is the artificial intelligence infrastructure build out, specifically in the United States. Those companies have issued their own bonds to fund this build out along with other investments. But I think the majority of where this cash is coming from is these private AI companies and private equity companies, hedge funds, whatnot, issuing their own bond structures with their own coupon yields attached to private investors who give them actual physical US dollars so that these guys can go build out all these data centers. If the bond yields rise on that debt, just like any other bond is debt, then the AI build out for the United States, it gets really pressurized really fast. We've already seen a little bit of the gas taken out of that bubble. They don't want a full collapse because I started thinking about it this morning. This may be the closest thing to the United States having another moonshot than we've seen in decades. When we say, some of you guys might not understand what the term moonshot means. Moonshot is a term that was built in the late 60s, early 70s when we talked about going to the moon. Which, and of course, somebody somewhere out there will say, we never went to the moon, David. It was all fake. Whatever. Okay, let's just go with the fucking narrative so that we can have some kind of clear structure here. We went to the moon in 1969, right? Was it summer? Was it June? I can't remember. I think it was June or possibly July when Neil Armstrong and crew first got on the moon, right? That the whole space program was one of the most expensive things ever. It was national pride. It was a fight with the Russians to see who could get there first. It was the space race. We were building rockets and rocket engines, and kids around the globe were fucking fascinated with NASA and engineering and math and physics. It caused all kinds of knock-on effects like Velcro. If you use Velcro today, that was designed for the original space program in NASA. Circuits, like essentially the microchip that we all know and love today, that was one of the things that was born out of the space program. It certainly didn't look like it does today, but that you get my drift. There was all manner of ancillary industry that was created out of that. Right? And again, it was a matter of national pride. And that was important to the morale of the citizenry of the United States because we're still in the Cold War. We are literally right in the middle of the Cold War. It's like this tension that we got going on with Russia and the overarching umbrella of fear that covered all of that was mutually assured destruction through intercontinental ballistic missiles. And through that tension, we have this combat that we can play out on the ground with these enemies, with Russia at the time. The space race, the moonshot. We haven't had anything like that until now. And I have this notion that President Trump and his administration, they want to usher in this moonshot. I'm surprised that they're not really marketing it that way. I mean, I think he's called it a moonshot a couple of times, but only in passing. I'm talking about a full-scale marketing campaign. I'm surprised that I haven't seen one about America ushering in the age of artificial intelligence. But we can't fucking do that if bond yields rise. So, of course, the Treasury is going to buy back as much debt as humanly possible. And they've only got one way to do that, and that's to print money. This rally has nothing to do at all with Donald Trump saying anything at all about the fucking Clarity Act. It amazes me how Decrypt has completely missed the point. Whatever, I don't care because we're talking about AI now. AI adoption in crypto crime has risen 40% over the past year, according to TRM Labs, and Danny Park details it for the block. AI adoption in crypto crime has risen 40% in the past year, according to a new report from TRM Labs, with the increase driven primarily by scammers. Scammers. The firm's 2026 AI in Crime Adoption Index places overall AI use across crypto crime at an emerging level of 54 out of 100, and that's up from about 28 in 2024. TRM listed scams at a mature level in terms of AI use, while hacking and ransomware remains emerging and narcotics and darknet markets stay at the earliest, quote, horizon stage. Quote, AI has not invented new crime. It removed the constraints of old crime. The skill floor has collapsed. The scale ceiling has lifted. The fake identity has now gone industrial. What used to take a team of operators now takes one person with a subscription, end quote, said Ari Redboard, global head of policy and government affairs at TRM Labs. The share of crypto scam reports involving AI, such as deepfakes or AI chatbots, has risen as much as 13 times since 2022. Reported losses from deepfake scams in 2026 to date have already surpassed the full year total for 2025 by 263%, showing the accelerated adoption of AI in scam operations. Crypto hacks are another area that is quickly picking up on AI to enhance their operations. TRM said North Korean cyber actors are using deepfake IT worker infiltration, AI-run social engineering, and AI-assisted vulnerability discovery to target firms and protocols. Multiple security experts have recently warned that AI could uncover vulnerabilities that humans cannot or have just flat overlooked. At the Wyoming Blockchain Symposium 2026, Global Settlement Network CEO Ryan Kirkley said AI agents could soon allow hackers to break into Wi-Fi networks, passwords, and wallets at a scale previously impractical. Quote, it used to be so hard to try to hack a person worth $200,000 because why would you spend all that time going after $200,000? Now I can have an agent that goes after everyone, Kirkley said. In June, security engineer Taylor Hornsby discovered a critical vulnerability in Zcash's Orchard transaction pool using AI, which could have been exploited to create an unlimited amount of counterfeit tokens within the pool. Pausing here to say, and we still don't know if they did or not because Zcash is, well, Zcash, and that's an essential problem it has. Anyway, TRM said digital asset hacks reached a record 201 in the first half of 2026. That's more than double the 2025 figure. Most ransomware operations are already utilizing AI at the phishing and initial access stages, and no-code ransomware kits are sold for $400 to $1,200. Last month, researchers disclosed Jade Puffer, the first fully agentic ransomware attack used for an extortion operation where an AI agent handled reconnaissance, credential theft, lateral movement, privilege escalation, and encryption end-to-end. Quote, Jade Puffer shows what ransomware actors are now capable of. This is the shape of attacks at scale against hospital systems and other critical infrastructure with no human required in the loop. That is the scale that makes this a civilization-level threat. Meanwhile, AI use in narcotics trafficking and darknet markets remain fairly limited, concentrated mainly in the marketing realm, TRM said. They explain that much of the measured criminal activity ultimately moves value on public blockchains, making on-chain trends a reasonable proxy for broader patterns. That's the end of the article, but I want to revisit this sentence. This is the shape of attacks at scale against hospital systems and critical infrastructure with no human required in the loop. That is the scale that makes this a civilization-level threat. Now, marry civilization-level threat back to what I was saying about the moonshot and bond yields. This is critical. It is critical for the United States to be at the forefront of artificial intelligence. Now, the frontier AI companies in the United States are completely dropping the ball. But the infrastructure build out, that's the focal point for what I'm talking about when I talk about moonshot. You're going to see the Federal Reserve, the Treasury Department, the SEC, and the CFTC, along with President Trump's administration, work hand in hand to make sure that under no circumstances do bond yields rise above some ceiling. They will do everything in their power to keep it down. Because if they do not, then the bond yields rise above that whatever ceiling, I'm sure that they're running math, that there's a number at which it crosses that causes the infrastructure level, institutional level investment packages that have been spread into the AI infrastructure space in the United States fucking collapses. And it's spectacular. Not kinda, not a deflation of the bubble. I mean an infrastructure level collapse because nobody can afford the money or the interest on the money that they borrowed to make it happen. So not only would all work stop on the AI build out in the United States, we would have to start selling shit off to other countries that didn't make the mistake that I think has been made in the United States when it comes to the investment level and the investment style and the instrumentation that we've chosen to do that investment on the AI build out. So two things are working in tandem. One, I do think the United States needs to be in the driver's seat of the AI future. Is that because I'm an American by birth? Possibly. Most actually, yeah, it's going to be there. There's going to be some. I bitch about the federal government, but I love America. Right? The federal government, in my view, is an actual enemy to the ideals of America. I can completely separate that shit out from each other. However, I don't want China to be in the driver's seat of this. Because whatever culture is in charge of AI is going to be the culture of the AI infrastructure. And if China gets a hold of it, you get authoritarianism. If India gets a hold of it, you've got authoritarianism. And forgive me for any Australians out there listening, if Australia gets a hold of it, you're going to get a bunch of weak, spineless fucking twits. And of course, I don't mean that about the citizenry, or at least partial citizenry of Australia. A lot of you guys are really strong and really capable and really individualistic. But man, I mean, your government has just forced a collapse of a lot of the way the civilian population has thought about it, about everything. Oh yeah, we'll wear the mask because you told us. We'll give up our guns because you told us. We'll think this and we'll think that and we'll do this and we'll go here because you told us to. It's fucking sad. So I don't want Australia in the driver's seat either. Brazil? I don't know. Probably wouldn't be terrible. But Canada? Fuck that. We, just got off of talking about Australia. And again, there's a lot of Canadians out there that I have a lot of respect for. But man, over the past, 20 years, I've just seen Canada kind of say, whatever, I'll do whatever you say. Yeah, I'll wear the mask. Yeah, I'll take the shots, whatever. Do whatever you want to me. I'm fine. Leave me alone. Kind of shit. So the only really to tell you, in Europe, no, European Union, they don't need to have anything at all to do with this shit. They've already got the mega super collider over there in Switzerland and France or whatever. So they've got that. They can do that little tiny moonshot. But United States needs to be in the driver's seat on this one, which means the frontier companies need to get their shit together. But it's the infrastructure investment and the instrumentation used in that investment that I worry about the most. And that's why we may be entering into a Bitcoin bull market, which I think is ironic considering that it was the very same infrastructure build out that started sucking the sales out of Bitcoin's price. But now they're just going to have to print money to make sure that this moonshot doesn't collapse into a hole in the ground. Like Mantra. It's a shit chain, I know. Mantra token plunges 18% to a record low as their blockchain halts after exploit. Again, this is your final word of warning for the show, as I try to do. Don't screw with this stuff. Just buy Bitcoin and hold Bitcoin. This is out of CoinDesk. Mantra token, which is a blockchain focused on putting traditional financial assets such as funds and bonds on chain, plunged 18.5% to a record low shortly before the network stopped. Mantra fell from some ridiculously low price to an even lesser price at around 11:10 p.m. UTC on Thursday, according to CoinGecko. The project has not said whether the price drop was connected to an attack, through those security incidents can trigger outsized moves as traders rapidly reassess risks. We're aware of an incident affecting Mantra chain and have halted the chain as a precaution while we investigate. All endpoints and transactions are currently frozen. And they said that shit on Twitter. Mantra initially said it had frozen all transactions and network endpoints. Deposits and withdrawals were also paused on affected exchanges. A later update said an attacker had exploited a vulnerability in an upstream dependency, meaning software used by the Mantra chain, but developed outside of the network itself. Okay, so they've got an upstream attack. So some software library or code that they are using in their blockchain has been there's a vulnerability in it, which means that that vulnerability can be exploited in any project that uses that particular library or piece of software. If you really, really want to just avoid all that heartache, dude, just buy Bitcoin, hold Bitcoin, and I will see you on the other side.
This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.